housing market has continued to have a rocky course over the past year. Just picking up the Wall Street Journal this morning, there's an article about home sales being up. There's an article about jobless claims being down. That's good, but within the last week, there have also been a lot of reports around home prices still being sluggish or even being down in some places. So what sense can we make of all of this so we know where we really stand? And I'll direct that initially to Mark.
Sure. So I've had the unfortunate or dubious distinction of calling the bottom twice now, so I might be able to go for the hat trick and call it again. And the real issue is it's been, I think late 2009 and 2010 was a period of sort of the thing bouncing along the bottom. And we're trolling that bottom there right now, and as Teresa said, we're getting these mixed signals, many mixed signals. Home sales go up, home sales go down, but let's be realistic, they're all going up and down around a very low trend, right? And so there's just not a lot of home sales out there, particularly after the tax credit expired. And while the tax credit certainly helped, it pulled forward demand into the earlier part of 2009 and early 2010. And house prices are effectively responding to that fact. There's just not a lot of sales. The other two issues that are going on in the housing market that are causing pressure or distress right now is clearly the issue of shadow inventories. We estimate, and ours is a low side number, we estimate roughly 2 million additional housing units are somewhere sort of stacked up in the delinquent foreclosure REO pipeline that are just not visibly listed yet. At the prevailing sales rate, that's about an additional 8 months of supply. So we're talking about, what's the prevailing number? It's like 15 or 14 months of supply right now visibly. So there's just a lot of supply out there. The good news to that is the actual inventories themselves of homes for sale are not growing. The reason that the month supply is going up is because people aren't buying. Again, it's sort of this demand issue. Nobody wants to buy. I think from the consumer's perspective, a lot of that simply has to do with the uncertainty. They read, and maybe it's partly my fault, I publish statistics to say house prices are going down. Our last number said November 2010 from November 2009, the year-over-year price decline nationally was 5%. What we didn't publish was the month-over-month rate. It's even faster. So prices are again declining quite quickly. Not like they were in 2008 and 2007. That was sort of falling off the precipice. But prices are moving down again, and I think a lot of economists would agree that we're going to remove another 5 to 10% of equity cumulatively. We've already lost about 30, so this is a big deal. Why is it a big deal? Well, because that shadow and that lack of demand and that sort of uncertainty that's out there is causing this issue called negative equity. That is, people being underwater. How many people in this room know somebody who owns a home and they're underwater on their home? A lot, right? And certainly if we were probably sitting in California, it would be practically everybody, right? I jest, but Las Vegas, I think the number's around 70% of all mortgage homes are underwater today. The overall national number as of Q3 of last year was 22.5%. As house prices decline, obviously that number will go up. And that doesn't necessarily play straight into house prices, because what it's actually doing is locking people in place, right? It's hard to move for a new job if you've lost your old job. It's hard to move for a new one if you're underwater by 25 or 30%. Can't sell your house without a loss. It's hard to refinance and get those great rates that are out there today. So all of these things play into sort of creating a lot of stickiness in the marketplace, and it's playing, to some small part, it's playing a role in preventing unemployment, for example, from dropping faster than it is, although it's not moving very fast at the moment. The good news, of course, is a healthier economy is good for everyone. And time heals all wounds. I've been a Debbie Downer now for 3 years, and might have to be a Debbie Downer for a few more months. And but ultimately, I need to be Peggy Upper or something like that with all of this data, because these are cycles, and time heals all wounds. And while all this is going on, the challenge has to be is how do we do things in the marketplace to structure a marketplace that will be efficient and robust and provide credit and do all the things that it needs to do, even with, I think what we all recognize now is the possibility that something like national house prices declining by 30% could happen.